Welcome back, traders. In this video, I'll walk you through my full weekly trading recap using ICT concepts, optimal trade entry fair value gaps, liquidity grabs, and market structure shifts. I'll break down each trade day by day, what I saw, what I did, and most importantly, what I learned. If you're serious about mastering smart money concepts, this one's for you. Let's dive in. Monday, July 15, what I saw before entry. From a daily time frame perspective, the market was operating at an all-time high. Because of this, it was difficult to lean heavily bullish or bearish. But based on the macroeconomic environment, I was expecting bullish price action. Switching to the 4-hour chart, I immediately spotted a new week opening gap. The difference between Friday's close and Sunday's open. That was my first key level. As price opened on Monday, it dipped below the Monday open and took out minor sell-side liquidity. At the same time, there was a visible buy-side liquidity resting above at Friday's high. In the London kill zone, price created an inversion fair value gap right after collecting that early sell side. That gave me a narrative the market had grabbed liquidity, left an imbalance, and had a clean target above. I pulled my optimal trade entry from the London kill zone low to the 8:30 a.m. high. The 62% retracement of the OTE landed exactly on the inversion fair value gap. That was my entry. I placed a buy limit order at that 62% level, and my stop loss went just below the London kill zone low. My take profit was at the previous day high, which is Friday high, aligning with 100% of the OT. What happened? The market came directly into my entry with surgical precision. It gave me a sniper entry, then surged upward with strong momentum. My TP was smashed cleanly at the Friday high. Price didn't stop there. It continued clearing more buy-side liquidity and made a new all-time high. But I wasn't in the trade anymore. I stuck to the plan and didn't hold overnight. No regrets. The new week opening gap still acts as a reliable magnet and entry zone. The combination of liquidity grabs plus OTE plus FVG continues to prove deadly accurate. Patience in the London kill zone sets up excellent trades later in the day. Market outlook, Monday's move set a strong bullish tone, but we were approaching exhaustion levels. I remained cautiously bullish going into Tuesday, waiting for a cleaner setup. Tuesday, July 16th, CPI day. What I saw before entry. Tuesday was a CPI day, one of my favorite trading environments. On the daily chart, price was sitting at all-time highs, and I maintained a neutral bias, expecting either a continuation or strong rejection. I was watching for the market to take London session highs and then run into buy-side liquidity. That happened exactly as expected, followed by a clear market structure shift, confirming that the market was likely ready to reverse. A fair value gap formed on the drop in price looked prime for a retracement into that imbalance. I also anticipated that the market would revisit the consequent encroachment, the midpoint of the new week opening gap from Monday. 2. What I did, the actual trade. I measured my OTE from the 9:30 a.m. high to the low of the breaker. The 62% retracement lined up perfectly with the fair value gap. I placed a sell limit order at that level. My stop loss was above the 9:30 a.m. high. Take profit was placed at the 100% OTE right above the CE of the new week opening gap. 3. What happened? The market retraced slowly and precisely tapped into my fair value gap. Price reacted perfectly, sold off with strong follow-through, and hit my take profit without any drawdown. It even kept dropping beyond my TP, reaching toward the CE of the NWOG just like I anticipated. Still, I didn't hold the trade longer. I learned that the CPI volatility provided the ideal fuel for structure shifts and FVG setups. The ICT 2022 entry model was textbook, showcasing liquidity grab, market structure shift, and FVG entry. High time frame alignment gave me conviction and clarity. Tuesday's strong reversal hinted at a continuation move into deeper retracement areas, especially the full CE of Monday's opening gap, becoming my focus for the next session. As I navigated the complexities of the market, I began to understand the significance of each shift in structure, realizing how pivotal these moments were for achieving my trading goals. Discussing strategies with colleagues brought new insights, reinforcing my beliefs about liquidity dynamics and creating a supportive environment for growth. My workspace became a hub of knowledge filled with resources that inspired me to delve deeper into the art of trading. Wednesday, July 17th, PPI day. What I saw before entry. Wednesday featured high-impact PPI data. Based on Tuesday's price action, I anticipated a bearish continuation into the consequent encroachment of the new week opening gap. The Asian session showed consolidation. The London kill zone pushed price down into the NWOG and then reversed, taking out both Asian and London session highs. At the 8:30 a.m. news release, price spiked up and grabbed buy-side liquidity, forming an inversion fair value gap on the reversal and breaking structure. This aligned perfectly with the ICT silver bullet model liquidity run plus market structure shift plus FVG. What I did, the actual trade. I drew my OTE from the 9:30 a.m. high to the low of the market structure shift. The 62% retracement aligned precisely with the inversion fair value gap. I placed a sell limit at that zone. Stop loss went above the 9:30 a.m. high. Take profit was below the CE of the new week opening gap. Volatility increased post-news. Price tapped right into my entry zone and dumped with strong momentum. It was a clean sniper entry followed by a swift and clean TP hit. The silver bullet model is extremely effective when paired with news. Again, liquidity plus structure shift plus FVG plus timing yield deadly accuracy. Having the daily narrative in place gave full confidence in the entry. With price now firmly tapping into deeper retracement zones and taking multiple liquidity pools, Thursday's setup would depend on whether we consolidate or create a new FVG. My bias became more neutral, waiting for confirmation. In this moment of uncertainty, the atmosphere is thick with anticipation as traders weigh their options, each one hoping to gain an edge in a volatile market. As the day progresses, the trader delves deeper into the latest market reports, seeking insights that could influence their next decision and potentially reshape their trading strategy. Thursday, July 17th. I just smashed the TP on the NASDAQ 100 using a sniper entry. Let me walk you through it step by step. From the daily time frame, my bias was neutral because price had already taken a major buy-side liquidity after tapping an all-time high and was reacting to a previously formed fair value gap. On the 4-hour time frame, I saw that the market formed a new week opening gap and took minor sell-side liquidity. Then it pushed up to take buy-side liquidity, forming a fair value gap on the way. It retraced back to the new week opening gap, showing a long wick. This aligned with what ICT teaches, like the wick makes the damage, the body tells the story. So I expected price to revisit that buy-side liquidity area again. On the 1-hour time frame, things became even clearer. The market cleaned minor sell-side liquidity and traded back into the new week opening gap with a long wick. There was a visible buy-side liquidity pool resting above. A fair value gap formed during the open of today's session. That's when I started looking for a trade setup. Entry setup, I drew my optimal trade entry, OTE, from today's market open to the London session high. The 62% retracement of the OTE landed perfectly at the midpoint of the fair value gap that formed after NY open. That was my entry level. Trade details, I placed a buy limit order right at that level. Stop loss was just below the fair value gap. Take profit was set at the visible buy side liquidity above. I used the 1% risk on the trade. The setup was based on the fair value gap plus OTE concept, classic ICT model. The market came down with perfect precision, tagged my entry exactly. It was a sniper entry. Price then ripped with high volatility, never looked back and smashed my TP. The whole move aligned with the narrative I built from higher time frames. My neutral bias was spot on. It helped me remain flexible and responsive. The OTE plus FVG combo continues to prove extremely reliable, especially around news-driven volatility. ICT's narrative of the wick and body played out beautifully. The higher time frame alignment gave me the conviction to hold the trade with confidence. This trade exemplifies the power of preparation and understanding, market dynamics reinforcing the importance of strategy and trading success. With every successful trade, I remind myself that patience and discipline are key, setting the foundation for continual growth in my trading journey. Right now, the market has cleared that buy-side liquidity and we're sitting near an exhaustion point. If another fair value gap forms near this level, we might see a reaction, possibly a reversal or continuation. I'll be watching for either a new FVG or a liquidity sweep in the next session. On Friday, the market structure was unclear and didn't offer a clean setup, so I decided to pass. There's no need to force trades at the end of the week. I protected my capital and my psychology. That wraps up my week. A clean, consistent set of trades based entirely on smart money concepts. Every move was planned, every entry had purpose, and most importantly, my psychology stayed sharp. If this breakdown helped you see the charts more clearly, leave a like, drop your favorite trade of the week in the comments, and don't forget to subscribe for more weekly recaps just like this. Until next time, stay patient, stay sharp, and trade like a sniper. As I walked away from my desk, the calm of the evening enveloped me, a reminder that trading is not just about profits, but also about preserving one's peace of mind. The sunset over the skyline mirrored my sense of accomplishment, signaling the close of another trading week filled with lessons and triumphs. In this quiet moment, I reviewed my trades and reflected on each decision made throughout the week, knowing that every entry taught me something valuable. As I sipped my tea and planned for the next week, I felt ready to adapt and conquer whatever challenges lie ahead.